Hello, everyone, and welcome to the ML podcast. In this episode, we are joined by Hugh Agro, President and CEO of Revival Gold. Revival Gold is a gold development company focused on advancing gold projects in the United States. What makes the company really interesting to follow is that Revival Gold has exposure to gold development in the United States at a time when gold is receiving more attention from investors globally. The company is still in development stage, which means there are both potential and risk. And that is exactly what we want to understand better in this conversation. In this interview, we talk about Hugh's background, Revival Gold's project, the company's strategy, but also the broader gold market. The video is divided into three parts. So firstly, a short introduction, which is this part. Secondly, the full interview with Hugh. And lastly, me and Fredrik will summarize our main takeaways in Swedish for our Swedish audience. ML Center is a platform for retail investors in Sweden, built by investors for investors. Before we start, a clear disclaimer. This interview is sponsored by Revival Gold. Nothing in this video is financial advice, investment advice, or a recommendation to buy or sell any security. This content is for informational and educational purposes only. This interview may contain forward-looking statements and technical information regarding Minerals Project, including statements about resources, development plans, timelines, permitting, financing, economics, and future expectations. These statements are subject to risks, assumptions, and uncertainties, and actual results may differ materially. I hold shares in Revival Gold at the date of recording. Viewers should always do their own research and consult a qualified financial advisor before making any investment decision. With that said, let's get into the interview. Welcome everyone to the ML podcast. Hugh, first of all, thank you very much for joining us today. It was a real pleasure to meet you at the Deutsche Goldmesse in Frankfurt, and we really appreciated the conversation and we look forward to seeing you again.
Ellie, it's great to be with you and Fredrik and Ashima. It's had a really nice little chat about German beer and Swedish saunas. So
German or American beer?
I have to take German beer. That light beer that they serve up in the United States is just a little too watery for me. I like the good German beer. Thank you.
Thank you.
Yeah, looking forward to more of that.
Yeah, exactly. We had a short minute conversation interview that we posted on the social medias that was really appreciated. And what makes Revival Gold especially interesting to us is that it combines three things that we think matter a lot in this market. So firstly, two really good assets and a clear path to production and a great management team with a proven track record. So today I'd like to structure the conversation in three parts. So firstly, your background and leadership. Secondly, your broader view on gold and the macro environment. And thirdly, the main part of the discussion, Revival Gold itself, the asset base, the production path, and the key milestones ahead. So let's begin with the people behind the company, because in mining, the quality of the team is often just as important as the quality in the assets. So Hugh, could you walk us through your background in mining and some of the key experiences that shaped you as an executive?
For sure. Well, I'll start with saying I'm a mining engineer. So my entire career over about 35, almost 40 years now has been in the mining industry or related things. A short deviation during a downturn in the cycle at one point saw me doing some work in the tech space, but for the most part, I've been in the mining industry my entire career, and with majors developing portfolios of assets in operations earlier in my career around the world in South America, Mexico, in Mexico, in Indonesia, even in Russia and South Africa. So all around the world with my career. That's really what mining engineers do, right? We go where the mining projects are and build from there. Most recently in my career, I was with Kinross Gold, was part of building Kinross Gold from a $1.7 billion company to a $17 billion company before I retired. I retired and I started a short stint as a cyclist, as an amateur cyclist. It's my hobby and passion. And But I came back to this business in about 2017, late 2017, because really, Ali, I think there is a tremendous opportunity in the gold space right now. You've got a slew of majors producing gold, and there's not enough development companies generating new projects to feed future production. We can talk about some of that, but that's why I came back to the business to create, found, and build Revival Gold.
Thank you very much, and it's really interesting to hear how you were retired and then came back because you saw the compelling opportunities in the market. So, when you look back at your career, were there any specific lessons, whether from project development or leadership or anything else, that you think are especially relevant for today?
Well, Revival Gold, if we think about the name Revival, it's all about the revival of successful past producing sites where gold has been produced in the past and where gold can be produced again in the future. Thinking about my career and my experiences, this is one of the things that I learned early in my career. And we have lots of examples of projects in major companies that fall into the back corners and are ignored or left unadvanced. They become tired assets that nobody wants to do anything with, and then they're sold or they're left just in fallow. And I've had lots of experiences with that through my career, and I can think of a few examples. The Hale site in Carolina in the United States was a cast off from Kinross, the company that I was part of building, and it was a cast off because our internal team in the big company couldn't find a path forward for that asset. And along came a spry and ambitious CEO, Diane Garrett, who bought that project for us for pennies on the dollar, reassembled the land position, and then turned it into a successful development project, which was subsequently bought by Oceana Gold and now underpins, half the net asset value for Oceana Gold in the United States. Now, that took a lot of work and a lot of capital to get there, but the lesson was learned. These cast-off assets have a lot of value in them if they're put in the right hands. Another example of that, of course, is Malartic, which was cast off from Barrick Gold. This is a project that now underpins 1 million ounces a year of production for Agnico Eagle, one of the majors. But back about 16 years ago, that was a cast-off asset from Barrick. It was acquired by Sean Roosen and his group. They took the task of moving a town, developing out the resources, building a mine plan, and ultimately that project was bought by Agnico and Yamana Gold at the time, and then reconsolidated by Agnico, and Agnico's gone underground. They've developed out the throughput, and away we go here. I'm going to give you a third example of this revitalization of successful past producers that are examples in my career of success, and it's the Detour Project. One of my early employers was Placer Dome before I went to Kinross Gold. This was a Canadian mainstay gold and copper miner, and Placer developed out this Detour Gold Project in Canada, and it was an underground mine, and then it was cast off as a closure site. But of course, the best place to find more gold is where it's been found before. And along came Gerald Pendelin, who rebuilt that project, developed up the mining plans for it. It was subsequently put into a bigger company and developed out. And that asset is another one of those, almost 1 million ounce a year producers for Agnico Eagle today. and underpinning a lot of value. So in that company. So these are three examples. You asked me for some experience in the mining sector in my career where, it's had an impact on me. Those are three examples of things that I've seen in my career and wanted to replicate when we built Revival Gold in the strategy around how do we create value for investors. And that, simply put, is to find these unloved assets that have been successful past producers and then bring them back into production, and the exploration to unleash future value and option value for our owners.
That's really good background, really interesting. Thank you for sharing those. We love a management team and the CEO that has proven track record of success. So that's a really good one. But let's zoom out a bit and talk about the broader market, because all gold companies operate within a much bigger gold environment. How do you currently view the broader macro for gold, and what variables do you pay the most attention to?
Well, I'm bullish on gold in the long run, and that's because I can look back at the track record of gold since the 1970s and the unleashing of the U.S. dollar from gold. And of course, what's happened since then is that gold has continued to perform relative to the U.S. dollar as the U.S. dollar has been debased. Our political systems are such that the fiat currencies are constantly being debased through issuances of new currency, and that's a known trend. There's nothing magic about that. The trick with gold is that the supply is constrained, and going back to an earlier comment I made, the pace of global production today is running at about 120 million ounces a year. The pace of discovery of new gold projects is running at about 20 to 30 million ounces a year. And that's before we think about permitting and reconstruction of assets to actually produce the gold from these discoveries. So there's a big disconnect between the pace of global production and the pace of discovery, let alone the emergence of new production opportunities, the permitting, the construction, the actual delivery of the new ounces of gold. And I think that spells opportunity. And it's why I'm particularly interested in investing in not just gold, but gold developers, because of that extra leverage that comes from being in an asset that has exploration upside and option value, and that is scarce. And particularly if we can do that in good geographic locations where we don't have geopolitical risk. Because remember, one of the reasons we invest in gold and gold-related themes is because we're looking for insurance against difficult times, and that does not make sense to go and pursue that sort of investment strategy where there's undue geopolitical risk. I think you want to be in good geographic domains where there's security of title in the long run and security of the financial system and the framework upon which the gold asset is producing that gold and will so in the future. So I'm bullish on gold. I'm bullish on gold because of the history of fiat currencies being debased by governments. I'm bullish on gold because I look at the relative performance of real assets in the economy today, where we've got heightened valuations in some sectors, mostly in technology and AI, in the S&P 500 broadly. And I think in everyone's portfolio, there is good rationale to own some hard assets, including gold. And I would say for those that have appetite for the volatility, there's even better exposure in the developers today because there's excellent value, there's a strong supply-demand fundamental, and there's an opportunity to enjoy the benefits of exploration success on top of all of that.
Thank you very much for that one. We also love a management team that understands the sector and see what we see, the opportunity that we see. As you mentioned, there's a big disconnect, and we also see a big opportunity going ahead. Off cam, we discussed a little bit about the S&P 500 and the returns there. Since 2009, every 6 months, S&P 500 has reached new all-time highs every other 6 months. So there's no reason for the retail investor to really look at the scary markets of gold and silver, because at the same time that S&P has gone up every other 6 months and reached new all-time highs, gold and silver has had a tough decade in the back. So, but we see that's changing for the coming year, and that's where I think the gold developers and the gold space will get even more attention later on.
Well, Ellie, just add some detail around that. I mean, we went through what I'll call a nuclear winter between about 2011 and 2018, 19, 20. And it's just been in the last 4 years, I would say, that gold has started to move, right? And gold is up dramatically over that period of time. But what we're not seeing is the valuations on the developers move yet. And I think that's why there's a particularly strong case for the developers relative to the producing gold companies. The metal itself is up dramatically, some 4 times in the last 4 or 5 years, or maybe 5 or 6 years. But the senior gold stocks are up as well. The developers have not had the same re-rating, and so if we're going to invest in gold, I think there's really good valuation to be found in the developers in particular. And then the theme of gold going forward, as you've pointed out, is strong because on a relative basis, gold has really underperformed some of these financial, more speculative assets. And I'd say that's true of all hard assets. So I think gold is part of that hard asset portion of one's portfolio, and any financial advisor, I think, would be attuned to that. And the special piece that I think ML brings to the table is the screening of these development company opportunities, these producing opportunities that are growing and that have extra leverage for investors with relatively modest downside. And I think we have to acknowledge that there is downside. There's a lot of volatility in the market. I'm not a financial advisor. As I said at the outset, a mining engineer who's been in the gold space and the gold development mining space for most of my career. But I think we can take some of that volatility and capitalize on it. And when asset prices are down, when valuations are compelling, that's when I think the money is made.
Yeah, totally agreed. And it's a really interesting takes on the markets, and I agree with all the things that you mentioned. And there's a big difference between development companies and quality development companies, and that's where I put you on that spot. So good quality development companies will probably do really good in the coming years, from my point of view. But Fredrik, you can move on with the questions regarding Revival Gold.
Yeah, thank you very much, and super interesting discussions, and I like how you see both of you. So before we deep dive into the story, so we would like to have like an overview. So Revival is a great straightforward story with 2 past producing open pit heap leach assets. So the company is targeting about 160,000 ounces initial for production from its projects. Could you give us a short update on the projects and their progress and the timelines coming?
Our lead project is Mercur in the state of Utah in the United States. This is a project that was previously owned by Barrick Gold, the industry leader in North America, and or one of them. We completed the purchase of the asset about 2 months ago, so now we own 100% of the asset, and we actually own a much larger position than Barrick owned as part of the consolidation over the last 12 years. It's about 7,800 hectares land position. Mercur is on a fast track to production. We'll produce about 100,000 ounces a year. A construction decision to be made in early 2028. Between now and then, we're working on the engineering studies, the permitting steps, and all of the detailed design work. We are funded to get to that construction decision on Mercur, and then we'll work towards the capital funding, which will be about $210 million for about an NPV of $740 million at $3,000 gold. Our other asset is Beartrack-Arnett, located in Idaho. It's about 4.6 million ounces already. The first phase of that project will generate about 60,000 ounces a year of gold production. And then beyond that, we're currently exploring with 2 drill rigs on the underground potential in that project. And we see a huge potential there for exploration and discovery. So if you think about Revival Gold from a high-level point of view, 2 assets, one moving quickly to production at 100,000 ounces a year, the second with another phase of production taking us up to 160,000 ounces a year, and then beyond that, exploration into the underground and beyond. Now, both these assets are brownfield sites, so they benefit from a lot of infrastructure. I'll talk about that in my presentation. But Frederick, this is a relatively low-risk setting for development because the permitting aspects are known, the communities are supportive, and there's, of course, a huge theme of bringing back domestic mining production in the United States, which is an overarching tailwind for us as we move forward with our path to production and delivering value to investors. And just to finish off, you know, the summary of why this should be of interest to the investor is that with our first phase at Mercur in Utah, we'll generate some $300 to $350 million a year of free cash flow at current gold prices. And the market cap of the company today is about $200 million. So just think about that, a 1.5x in just the first year of production from just the one asset. And we're talking about something that's less than 3 years away.
Yeah, great, and that's why we love this story. It's such a straightforward. You get they're lined up perfectly, and right now it's just the triggers are coming. You get everything there. We talked about it. The first of the permitting, and no, the PFS is coming in 27. Then we get the permitting in, and the construction decision, and then you get the construction and production coming in 29. And when that are coming, you're already probably a couple of steps ahead on the bear track. So it's really interesting here, and we love to see the more of the story and like to follow it. So take us through from here.
Okay, so shall I share my screen here?
Yeah, please.
Okay, super. And please chime in with questions as we go. This is a lot of fun for me, and really appreciate the attention from your audience, Ali and Frederick. I should mention the cautionary language. I did say that there are risks associated with our business, and I will repeat it here. Our website, www.revival-gold, contains the details on the disclosure and our cautionary language. I will be making forward-looking statements. We've talked about the summary of Revival Gold, 2 projects in the Western United States, target production of 160,000 ounces a year. I didn't mention that we're fully cashed up with about 37 million Canadian of cash, which takes us through to that construction decision milestone in early 28, and 4 rigs turning right now. Just to cover the capital structure of the company, I did mention we're about a $200 million US market cap with 319 million shares outstanding. The figure on the left shows you that we're about 60% institutionally and corporately held. So that is to say that we've got long-term, sophisticated investors in the company. That's a relatively high percentage for a company at our size. And I think that's a function of the team and the track record of the team working in bigger companies with some of these investors in the past. I'm talking about groups like EMR Capital, Conwave, the largest Swiss gold fund, Dundee Corporation, Aegis Financial, Libra, Sun Valley Gold. These are high quality investors in the gold space that your audience can feel comfortable riding alongside. Management and the board owns about 9% of the company, including myself. And I've just bought about 200,000 shares in the last couple of weeks here myself. So you're in good company alongside of management as well. I just want to summarize on the outset that we're trading at about 0.1 times underlying net asset value. So that's the market cap of the company adjusted for cash, divided by the net asset value, the future cash flow value that's been engineered in our assets. Now, hold that thought for a moment. We'll come back to it in a couple of slides.
Yeah, and before we go through, because we need to go back to the PNAV, but we can take it a little bit later. And this impressive share structure you got there, very tight float. We love that, 16% only for the retails. But what advantages does it provide as the company advances in this progress, as you see?
Well, the main advantage is that we have funding support from well-heeled investors to continue developing the project. So EMR Capital, just as an example, is a large Australian private equity fund that has got a lot of experience investing in the mining space. So we can look to those groups for the future funding that we will need to build the Mercur Project. And that gives us a huge head start, relative to a company that doesn't have that kind of support for future rounds of financing. And it takes the overhang off the stock on where are we going to find the money that will be required to build the project. We're already funded through the investment of these parties into the construction decision. And I think having them alongside gives us confidence that we'll be able to complete the process and move into production and generate that free cash flow that we're all looking at.
Thank you. And I agree with you there.
I'm on the net asset value slide, and I left it here so people can see the numbers. But at $3,000 gold, the total NAV, the total net asset value in our company is about $1.2 billion. And so there's a couple of things to point out here. First of all, this reflects just less than half the total resource that we have in the company. So there's about 6 million ounces of gold in the company's resource, but only about 2.5 million ounces are in the engineered studies that underpin that net asset value. So in effect, even though we're talking about a 0.1 times underlying P to NAV, that excludes 3.5 million ounces of future potential to move into the engineering studies. And that's before we get into the exploration beyond what we've got in terms of assets already. The other thing to point out on this slide is that if the gold price moves up to $4,000, and remember, we're at about $4,300 today, that NAV goes up by about 50% to $2 billion. So the value in the company and the leverage in the company, I just want to reemphasize that is in not just the potential around the gold price being higher, it's also around the potential for us to move more resources into engineering studies, and it's around the exploration beyond that. So 3 ways, 3 methods of driving upside, and this is why you want to own a gold developer relative to owning the metal itself. There's excess exposure for the money invested.
Yeah, and when we look at it, we can stay there for a second because it's so low. The PNAV is, as you said, is 0.10, 0.12 something, and if you look at it, it's probably not going to stay there last for long. It's probably going to run up with the times also. And if you look at it, why do you think it's still so low right now? And what type of catalyst do you see drive the re-rating or revival from here?
Well, I think as we de-risk the project and we take that net asset value and we fine-tune the capital estimates and and complete the permitting steps, I think that's where we see the re-rate in the stock is by de-risking that NAV. And it's a tried and true process. It does take time, but I think over the next year, as we move through the PFS and the permitting steps, and next year and a half, we'll be through all of those steps. That I think the multiple increases, and we'll come back to that in a moment, Frederick. But there's clear examples of how our multiple will increase, and that's before, and so that's what drives share price increase. But that increase ignores any of these other things I've been talking about: bringing more ounces into the net asset value, finding more ounces through exploration. Those are things that I think are even more compelling in terms of the value equation as we move forward, given the exploration opportunities we have and the fact that there's 4 drill rigs turning right now.
Yeah, thank you.
So just moving ahead here, I want to emphasize again that exposure that a developer provides an investor to the metal. So in our case, about 19 ounces of gold for every 1,000 shares held. And that's a function of the fact that we've discovered a lot of gold in our history, and we've issued relatively few shares to get there. And that's a function of the efficiency of the team. We've discovered our ounces of gold for less than $10 per ounce. And so, that low discovery cost, the very permissive geology that we're in for more discovery, and the efficiency with which our team is working drives shareholder value and shareholder exposure to upside. And in this case, again, I'll emphasize 19 ounces of gold in the ground for every 1,000 shares of Revival Gold held. So that's excess exposure. Now, we're not going to get all 19 ounces out of the ground. Some of that will be lost through the mining process. Some of it will be lost through the metallurgical process. But what this shows you is that there's a lot of leverage to that metal. Some $80,000 worth of gold in the ground for approximately, at today's gold price, today's share price, about $1,000 investment in the company. That's the kind of leverage that we get in a developer. I've talked a little bit about my history and background as a mining engineer, founder of Revival Gold about 7 years ago, to capitalize on this opportunity I've been talking about in the developer space. But I just mentioned a couple of folks on our team here. Tim Barnett, our general manager of the Mercur Project, has done 14 commissionings through his career. He's based in the Tooele area, which is where our project is located, in Salt Lake City area in Utah. So he's right next door to the project with his young family, and keen to do a 15th commissioning in his career. John Meyer is our VP Engineering and Development, and John has had the distinction of being the lead on the development plan for Fruta del Norte, which of course Lundin Gold has taken on to great success, and also with the Stibnite project, which is Perpetua's success and will now go into construction with the permitting finalized on that project in Idaho. John joined us from Perpetua prior to his career with Perpetua, Kinross, and Aurelian. He was with Barrick Gold, so he's got a great pedigree, and John's leading the charge on our engineering design, optimization, and the consulting permitting process. I'm going to skip ahead here now and talk about just briefly our board, led by non-exec chair Tim Warman. Tim is another gentleman with a lot of success in the industry, and most recently having been part of a company called Fiore, which developed the Pan Project in the United States, took it into production much the same way as we're planning to do with Mercur, and then that company was sold to Calibre, which is now part of Exelon, and of course Exelon is now merged with Orla. So Tim's been through these steps before, and is a super board, an independent board chair to have for the company. Wayne Hubert, another one of our founding directors, alongside of myself, actually lives in the Salt Lake City area. His past track record includes taking Andean Resources from a 100 million market cap right through to its sale to Goldcorp for $3 billion. So huge track record, local presence. And this is the rooting that we have in the U.S. in our local jurisdiction. It comes through people like Wayne, like Larry Radford, our head of technical committee, Tony Menini, who's from Rio Tinto and joins us from EMR Capital, one of our key investors. Look, we've got a great team here and a board that's got a ton of experience with driving success in the mining industry.
Yeah, I agree. It's just such a great both board and a good team there, and then really proven track record. So that makes a good confidence behind the story.
I'll move a little bit quicker here, Frederick, but I just want to point out where we are in the Western United States for those who haven't been to the Western US. These are generally rural states. Population of Idaho is about 2 million people. Population of Utah is about 3 million people. Most of those populations are in the city centers, Boise and Salt Lake City. Our projects are about a 6-hour drive apart. And so that facilitates the movement of people and common technical leadership. We're very accessible, and all of our activities are based in Salmon, Idaho, where our U.S. office is located, and in Tooele, where our project office for Mercur is located.
Is there like a difference in like jurisdiction and like permitting between Idaho and Utah, or is it pretty similar?
So permitting in the U.S. breaks down as to private ground and state or federal ground. And in both these states in the United States, there's a lot of federal ground. So there's a lot of permitting that takes place on federal ground. It just so happens that our Mercur project is on private ground. That's advantageous for us because we can go through a state process, which is relatively straightforward and quick to proceed. Our project in Idaho is on federal ground. It's a little more complicated. We've got to go through a federal process there. But remember, both of these sites are in existing past producing areas with supportive communities. And in the case of our project in Idaho, we're already on an existing plan of operations, a permitted plan of operations. So that means the permitting, although it will take longer than on private ground, it will move along relatively quickly. So I'm not, just to answer your question, there isn't distinction between really what state you're in here as regards the Western United States, all of which are in one form or another mining friendly states. But it's around whether you're on federal ground or private ground. And that's that I think is a more important distinction. The other important distinction is whether you're near water or not near water. And again, this is where we have an advantage with our Mercur project in Utah. Not only is it on private ground, but it's not near water, and there's no sufficient water of note. So that makes the permitting process a lot less complex. And it's one of the reasons why we'll move more quickly into production from our Mercur asset.
Yeah, great. Thanks. And we're coming into, because you have a couple of advantages that stands out on Mercur compared to other development projects in US. So we're coming to them.
So this is a view over the Mercur project. And this is a map on the top right of where we're located. So city of Salt Lake, I'm circling with my cursor here. Bingham Canyon, which of course is one of the world's largest copper gold mines, is located just outside of the city. And then on the other side of the mountain range, on the other side of the Ophir mountain range, is our project shown in red here. Again, about 7,200 hectares. and about 57 kilometers from the city of Salt Lake. This is a Carlin-type system. It's been mined since the early 1800s, before the founding of Utah, and about 2.6 million ounces of gold have been produced here. So proven past producer, and with some pretty high grades here as well, which gives us a lot of confidence in the exploration potential as we think about the project's depth potential. I mentioned already it's on private ground. That's key to our success here as we go. The land position shown on this slide, again, 7,200 hectares, shaded in gray. You'll notice that the mineralization is in two areas, the main Mercur area here, shown in red, and the South Mercur area shown in here in red as well. There's about 9 kilometers from top to bottom, about 15 kilometers overall from the top of the structure to the bottom of the property position. And I just emphasize we've got a paved road passing by the site. We're about 30 minutes from a town of 30,000 people, so good location, no requirement for a camp. And we've also got a power line coming through here to site. Of course, this was used in the past operation and will be used in the future operation. That's an energized power line. Water we'll get from 3 wells that are located here, and we've put some effort into refurbishing those wells already, and we have test work to confirm that they're ready to go, and we've put in a new pump for that facility. So we have water, we have paved road access, and we have power. I mentioned a few of the high-level metrics on the project. $208 million capital to construct Mercur. It will generate about 95,000 ounces a year over a 10-year mine life. It averages out to about 100,000 ounces a year in the first few years of mine life. Less than 2 years to permit. We're now about 19 months expected to complete permitting. And here's the big number here, $740 million of NPV, a 56% after-tax IRR, which increases dramatically at a $4,000 gold price from $740 million of NPV to $1.3 billion of NPV, from 56% IRR to almost 100% after-tax IRR. That's the kind of leverage that these projects offer.
Yeah, that's amazing. And you are in a good position here. You have around like 37 million Canadian dollars in the bank. You're debt free, which makes you in a great, strong position right now. And as you said, the capex is $208 million. And then how you see and how you're going to finance that one?
So the traditional way that one might approach financing a project in the United States, so remember, low geographic risk, would be project finance. We've approached some of the banks around this. There's a lot of appetite, and typically we'd see plus or minus 60% through some sort of a project finance facility. There's another plus or minus 20% that we'd probably do through equipment leases, working capital facilities, and mezzanine type debt. That leaves about 20%, which we'd probably do by equity. And so if you think about 20% of $210 million, you're looking at something in the order of $45-50 million of equity in 2028. And again, that's sort of speaks to the benefits of having the kind of institutional shareholder ownership that we have. We can feel confident around that 50 million plus or minus, if that's the structure we go with, Frederick, and the completion of all of the equity and debt requirements on the project. It's a nice position to be in. We've got a high IRR, high margin project in a good geographic location with lots of funding options. And debt's, one of the things we'll look at. Of course, we'll look at some of the other bells and whistles, traded debentures, streams, royalties, but really come down to cost of capital. And we don't want to have to put ourselves into a box until we get to the point where we actually need the construction financing, which is about 2 years from now.
Yeah, and probably also that when the share price getting up and your market cap getting up, it's probably like 2, 3, 4 times as today. Then the dilution is nothing when we are there. So a debt and a small dilution would be perfect for us as a shareholder. We prefer that before a streaming or royalty deal, but is as you said, it's a really good position, and the capex is pretty low here for as it looks like. So I like the options here that we get.
Yeah, and look, even if we have inflationary impacts, which are almost inevitable here, with the way things are going, I don't see this number really going to extremes. I mean, we're not talking about a $500 million or $1 billion project here. This is going to be a relatively modest capital. And as you point out, as we de-risk the project, our market cap is going to increase, and the importance of the equity component is going to become less and less relevant. And so then it comes down to cost of capital, and the sorts of constraints that come with that capital around our business. And so, yeah, I'm in the same boat with you, not particularly keen on streams and royalties. We'll give them a good look and compare them with the cost of debt facilities, which are temporary. Some of these streams and royalties can live forever, right?
Yeah, something like that. Yeah, great to hear. Thanks.
Okay, so just talking about some of the exploration opportunities. This is a cross section through the deposit at Mercur. It's an anticline, which is to say a layer cake of sedimentary rocks, and you can see that here. The brown unit at the top of the layer is where we're focused with our exploration right now, all within 100 to 150 meters of surface. So this is currently focused on the upper levels of the project area, but we've got these layers continuing below and mineralized. We know they're mineralized because we've got some deeper holes into them that show they're mineralized. We haven't put all of that into the mine plan yet, and we'll continue to develop that in future. But in addition to the main area we're looking at on the east limb, the right-hand side of the project area, there's also this potential where we've got a mirror image of that layer cake on the left-hand side of the page. Now, just to give you a sense of scale, we're talking about 9 kilometers from one side to the other side. And our focus to date has been entirely on the eastern limb, the right side of the page. So lots of opportunity for exploration on the other side of the page and at depth as we think about just the first 100 to 150 meters in the current plans that we're undertaking at the moment. Just to move on here and talk about the site. This is an overall layout for the project area here in the top right. What you can see here is the main areas of mineralization outlined in red. So main Mercur and South Mercur, about 5 or 6 kilometers to the south, more like 7 or 8 kilometers to the south. And we've got the ground in between, and we'll certainly want to do some exploration there, as well as north, where we've got open areas and drilling planned for this year, and to the other side of the projects. So those are the areas of mineralization. The main processing will take place in the West Mercur area here, where you can see this gold stack of rock. This is where the heap leach pad will go and the processing circuit. We're about a mile off the main highway here, shown in red. And remember that power line goes right through the site here, shown in blue. The haul distance from main Mercur is about 4 miles downhill, and the haul distance from South Mercur is about 5 miles downhill. And you'll notice we've got a dotted line here. This is a property that we just purchased, actually. 2 days ago, and this will allow us to make a more direct haul distance haul route from the South Mercur area. So continue to add value as we go here with property additions and consolidations. Now I think 100% complete. I've talked about some of these other items here, Frederick, but do you have any questions regarding the development or the site plan here?
No, it's really interesting. We were there you have a couple of it's a straightforward plan with a couple of good triggers here. You got the PFS expected in Q1 27. You get permitting and construction decision coming in like 28. And you get the first type of production in 29. And when you look at it, you get exactly everything there. It looks so good on Mercur. But if you're gonna like put it down to 2, 3 things, why or it stands out compared to other development projects?
It's on private land. There's no water. The site has a lot of data, 3,000 kilometers of drilling. There's a really clear path to getting into production on a meaningful basis with exceptional exploration potential because we're in one of these large Carlin type systems. We basically have it all. I can't think of anything that we wouldn't want to have here, except more people as we continue to grow the team and develop out the assets. And you can see the next steps here on this slide, all summarized. We've got metallurgical test work going on right now, 18 kilometers of drilling this year, and baseline study tests to be all completed, permitting completed next year, PFS and the FS with construction decision, as you've pointed out now a couple of times in early 28.
Great. Yeah, thank you very much.
Okay, so we'll move on to the other project in the company's portfolio. If this is not enough for you, we've got another project. It's Beartrack-Arnett. It's our founding asset. Already 4.6 million ounces of gold discovered by our team. That's the graph on the table on the bottom right. There is a PFS on that project for the first phase, taking advantage of this existing infrastructure. Remember, company name, Revival Gold. We're all about reviving these sites. And in this case, not only do we have a power line and a road and water, but we've got an actual gold processing facility that we can refurbish to produce more gold. So that's the first phase. But we're focused right now as we move Mercur forward in permitting and engineering. We're focused on exploration at Beartrack-Arnett. So that's our second phase underground project, and I'll just speak about that for a few moments. Again, a large land position here, about 6,800 hectares. The main mineralized trend is along a fault structure that I'm pointing out here called the Panther Creek Fault. It's mineralized over 5 kilometers. We've hit with every drill hole into it, including some pretty spectacular hits here, 71 grams over 10 meters in the Mason-Dixon area. We haven't really focused on that over the years. We've really focused our engineering work on the near surface open pit material. But because we've got this opportunity to put exploration into this asset as we move the other asset towards production, we've really been testing the underground here. And the last time this was drilled was about 3 years ago. So we're drilling now in the southern end of the project area where we last intercepted some 10 grams over 11 meters within 3.5 grams over 115 meters. So, geologists have been itching to get back here. And lo and behold, the first hole out of the program this year intercepted 5.4 grams over 33 meters in the system. We're continuing south, and it's interesting, my earlier experience about where do you find more gold? Well, it's usually where you've found gold before. Here we are right next door to the heap leach pad from the prior operation. The ADR gold processing plant, which you saw in the earlier photo, is right here. And a stone throw away, the structure continues from the old pit here south to the left as we go underground into what we call Joss. So this is classic. This is the best place to find gold, is where you found it before, in one picture. And the next slide really describes why the geologists are so excited about this project. This is what we call a long section view. It's grade thickness, so it's the grade that we've intercepted times the thickness of that intercept. And you can see we have these hot pods of mineralization in the structure. This is the South Pit pod. This is the Joss area pod, which we're currently working on. This is over 1 kilometer in strike. And you can see some of the intercepts we've got in this system already. The blue dots are the drill program that we've currently got underway and for which we'll have results over the next couple of months. And I want to point out in particular drill hole 254, which is about 1 kilometer down hole, some 800 meters below surface. And, we'll see how that grades. But we're really excited about all of these holes. They've all intercepted the shear zone, that is the favorable structure. And I think if we see any grade in those holes, that'll open up this whole area for potential underground mining, and be very exciting and an important catalyst for this project. Currently, none of this material is in an engineering plan. None of it's in a net asset value, and it clearly has the potential to more than double our net asset value in the company. So we'll be watching this very closely over the next couple 3 months.
Wow. And it's like a geological dream for some people. And you have a significant exploration upside there. You got already 6 million ounces. And what could we expect from the drilling programs the coming years?
Well, look, the initial focus here is to demonstrate continuity and depth potential. These kinds of systems, these orogenic gold systems, like the one we have at Beartrack-Arnett, they tend to go very deep. The Scandinavians will know of Kittilä, which is an Agnico operation in Finland. It's very similar in terms of the structure, the ore deposit model, and even the processing that's involved with this project. In fact, we've been out to see Kittilä down 2 kilometers and still in ore. And so here we are barely 500 meters down and looking at something that's about 800 meters down with another kilometer or so of potential at depth. If we really want to dream about the potential of this project, I think it could be another Kittilä.
Yeah, and especially when we talk about the phase 2 there, when we're going underground, this is really good in the little longer term. So nice to see.
Yeah. So if you think about this is a lot of option value. This is a big asset with a lot of strategic value, and the way we're going to get value out of it is by putting our first project, Mercur, which is a fast track and which will generate some $300 million a year of free cash flow, into production, and then reinvesting in this for the future of the business in the long run. Now, there's a lot of complexities involved with bringing something like this into production, and there's a lot of risk still in front of us, but you can sure see that this is the kind of thing that's a company maker.
Yeah, absolutely.
I'm going to roll forward here with a picture of a few of our folks visiting the Beartrack-Arnett site and talk about kind of next steps as we see the business. Right, first step, first phase is to develop out the Mercur heap leach project. It's a relatively low risk, low capital step forward that will generate some $300 million a year of free cash flow at current gold prices, commencing in 2029. A lot of steps to go through still to get there, but I think they're well defined. We have the team in place that can deliver, and we're funded to get to that important construction decision. Meanwhile, we're continuing to advance our Beartrack-Arnett project with exploration. The next step of production from that project would be the PFS that's moving forward on the heap leach potential. And that project is just the tip of the iceberg, right? So that aspect of the project is the tip of the iceberg. We want to continue to advance the underground as the third phase. It may actually be that the underground comes first, but as we've shown it here, underground would be the third phase, and that could take us up to a potential some 250, 300,000 ounces a year of gold production. So we've got these three steps outlined. Step one, Mercur, taking us up to about 100,000 ounces a year. Step two, just the first phase at Beartrack, taking us up to 160,000 ounces a year. Step three, the underground, which may see us up to 250, 300,000 ounces a year. Of course, a lot of work to do, but that's the vision for the company as we continue to grow. And here's valuations. Just to underscore the theme here and the opportunity, on a P to NAV basis, we're trading at that 0.12 times underlying net asset value, with peers trading at 2 to 3 times that. And as we progress the project, this is the point I was making earlier, towards production, becoming a junior producer, potentially being part of a senior producer in the future, the multiples that are paid for these assets go up. And that de-risking is really key to unlocking the value. Likewise, from a price to ounces of gold in the ground perspective, again, we're trading at about 1/3 or 1/4 of where some of our peers are already trading. And as we continue to de-risk these assets and move towards production, that multiple will increase. I just want to emphasize here, at the senior end of the spectrum, we're talking about valuations of $700 to $750 an ounce of gold in the ground. We saw that Rupert Resources, again, in the Scandinavian context, went for about $500 an ounce in the ground. Here we are with Revival Gold, granted less advanced, but in an equally good jurisdiction, trading at $24 an ounce in the ground. Lots of upside here for our owners, and relatively modest downside. The infrastructure alone on our projects is worth $100 to $150 million a year. $100 to $150 million in terms of the power line, the roads, the buildings, all of that infrastructure. So the downside here is relatively limited, and lots of upside as we progress towards production and demonstrate the exploration upside on the assets.
And we agree. We like that. That's why we like the case so much, both because of the straight ahead story here with everything. It's for the context, pretty low costs and the capex on it, which makes it pretty easy because we know the dilution is going to be minimal. And look at the P/NAV, and the dollar for ounces is ground is such a low. So it's a great opportunity here for the company. And I also think that we have all the good triggers and everything and the value in front of us. So we share that scene of everything as you've done. So
thank you. Just to brag a little bit about our team. These are the biggest new gold discoveries in the US in the last 15 years, pictured here. 2 of them are Revival Golds. Mercur, 1.4 million ounces, and Beartrack-Arnett, 4.6 million ounces. And I should point out that our chief geologist was a co-discoverer of this project, the Silicon Project, now called Arthur, which is under development by AngloGold Ashanti in Nevada. So our team as a whole has discovered 2 of the largest new gold discoveries in the United States in the last 15 years. And our broader team has been involved with 3 of them. So lots of talent here on the Revival Gold team. And it's should be no surprise that we have this track record given the experience of our team. And then finally, just to sum it up, here, Ali and Frederick. We've got growth, we've got scale in these deposits, and that's really important as we think about the strategic value of our assets to larger players, and that alternative. And then, from a backing point of view, we talked about the fact that we've got this solid backing here from institutions and corporates to finance our path forward to construction. And that means, we're really well set up with a compelling value story. I think your members can feel really confident in what Revival Gold offers. There is risk associated with any development company in the gold space. There's no question about that, but there's a heck of a lot of reward here as we deliver on these projects and their potential.
Yeah, absolutely. And thank you very much. Such a great story. We have been there. We talked about it, and you really put the fingers there. What all the key that we have in front of us, and the big value of the revaluation, everything. So we're really looking forward to follow you on this story the coming years.
Thank you very much, Hugh. It's been an honor to have you here on the ML podcast. I know the audience also enjoyed your presentation because it's a really compelling story and investment opportunity, something that we love as investors as ourselves. So thank you very much for that one. And we should catch up in the coming months because you'll have a lot of triggers coming, and we look forward to stay in touch.
Yeah, absolutely. Just for reference, our trading symbols RVG on the Toronto Venture Exchange, RVLGF on the OTCQX market. Our website, www.revival-gold.com. If any of your members have questions, I'm sure Ali and Frederick, you can help them with those questions, or they can feel free to get in touch with us at info@revival-gold.com. And I'll look forward to keeping you posted on developments. Please reach out anytime.
Thank you very much. And one last question is if you have any other last sentences for our investors.
Last comments. Look, I'm really looking forward to getting to Stockholm and to Sweden and spending some time with you all. I love the country and really look forward to developing the audience there. It's exciting. I think the timing to get involved in the development space right now is superb, and I welcome the younger audience and the Swedes.
Thank you very much, Hugh, and take care.
You bet.
Thank you. Bye.